All right, hey everybody. Let's talk about some banking and um, credit today. Um, we'll get rolling on a few videos. Talk about some of the things that some of you are pretty familiar with. Some of you are less familiar with these things, right? Some of you. I mean, this is a gen ed class, but I know we get some folks in here who are first time freshmen. This could be your one of your first college classes. Others are taking this as a senior, just as a filler class or a gen ed class, right? Whatever it might be. So we've got quite a range. Is my point, right? Lots of you have different experiences from one another financially, and so I'm not going to take anything for granted on what we're talking about here. So let's start off with just some general banking, right? So let's talk about the two kind of cards essentially you can get from a bank. All right, so you got debit cards and you've got credit cards. Um, Debit cards simply take money out of your checking account, right? That's where they're set up. You're not doing this with credit, right? You're not borrowing somebody's money to pay for your things that you buy and then paying them back. That's a credit card, right? This is a debit card. And every time you swipe or insert a chip or whatever, buy something online, excuse me, with a debit card, that money simply just comes out of your checking account, right? That's certainly one of the nice things about those, right? You're not borrowing money. You're just right. There's, as the second bullet says, right? You don't. There's nothing to repay, right? It's you just have to have money in that account. Most banks have a kind of a fail safe back behind, and what I mean by that is if you're buying something with your debit card, you don't have quite enough money in your bank account, in your checking account, I should say, then they will automatically move money from your savings account to your checking account to make that happen. Now, of course, that assumes that you have money in your savings account, right? So certainly that's something you have to be careful with. Both debit and credit cards have those limitations. We call them different things, right? The limitations with a debit card is you've got the money in your account, and when you're out of the money in your account, you're done, right? It's not like I jokingly hear some people say, "Hey, if I still have checks in my checkbook, then hey, I must be able to continue to write checks." It's like that is not how that works. Credit cards, on the other hand, right, have a credit limit, right? So maybe you've got I'll just pick a number, $1,000, right? Limit on your credit card. You've spent $950 in a time period, and you go to buy gas or go out to eat or whatever, and it's $55, right? It's possible, it depends on the type of card, that transaction will be denied, right? Because you're going over your limit. So, as I mentioned, right, we can get these from, well, debit cards we do get from banks. These could be the smaller bank, credit union, savings and loan, right? We can get those kind of things from those institutions. Um, Lost my train of thought on where else I was thinking about those. Oh, I know what I was going to say. There are also larger institutions, right, that aren't just mom and pop or more local, right, but it's like Chase or Citibank, right, huge banks, and you can get those kind of cards from them as well. Um, I think most of the time those are more credit cards than debit cards. However, you can of course get cash from your bank's ATM, right? That's possible. Um, Specifically from your bank, typically using an ATM at your own bank through your own bank or banking institution, right? There's no fee associated with getting cash from one of those machines, right? We call it getting cash from the wall, right? So we just, hey, I got to go to the wall to get some money. It's like, yeah, I know exactly what you're talking about, right? And other people have different names for them probably as well, but it's an ATM, right? It's an automated teller machine. Um, you can get money from other banks' ATMs, but many times there's a fee associated with that, and that fee usually isn't a whole lot, right? A couple bucks, $2, $3. Um, my wife and I, as we've traveled a little bit, we've even gotten cash from an ATM in a foreign country, right? And there was a fee, right, associated with that. And, we validate that card with, typically speaking, a 4-digit PIN number. Certainly not less than 4, might be 6, something like that. But that's how we validate who we are. That's why it's so important to keep that PIN number safe, right? Out of out of prying eyes, if you will, right? So, okay, debit cards. I'm going to go. Well, check. I guess I've got the credit cards later on, and how we do that. I've actually got some examples of that with credit. We'll come back to that, right? So as part of kind of the banking and that bank situation, right? That we've got checking accounts. I've talked about that a little bit already. Checking accounts, we call them checking. I think if I did a poll of the people in this class and I asked you how many of you actually have physical checks, right? Things where you can write a check and give it to somebody. I'm guessing most of you probably don't, right? It's just, it's not as commonplace as it was in previous years. It used to be that, right, that was how things were done, right? You didn't pay things online. It wasn't even an option, right? The internet didn't exist like it does today. You'd get a statement in the mail for your credit card or whatever else. You would write a check, put it in the envelope. Many times that envelope was provided for you, right? You took a piece of the statement, put it in the envelope. It had the address where it was supposed to go on that statement piece of paper. Stick the check in the mail, right, with the stamp on the envelope, and off you go, right? That's how things were done forever, right? And things aren't done as much that way. It can still happen, but for the most part, right, we pay for things online. It's certainly more convenient. Checks don't get lost in the mail. Sometimes things go wrong with paying online too, but right. Many times, this isn't always true, but many times there's a minimum starting balance to open that checking account. Also, many times the checking account and the savings account are kind of tied together, and there are benefits sometimes to opening both at the same time within the same bank. Sometimes, and I said does not receive interest down there at the bottom. That's not 100% true. Many times for those that are going to have any kind of an interest rate where you can get some money, right? Like it's a savings account, like you're going to earn some interest. There is that minimum starting balance, and maybe a minimum balance that you have to keep in order to earn interest, right? Sometimes that's necessary as well. Almost always right now, right? I can't imagine there are many banks, if any banks today, where you can't check balances of a checking account, a savings account online, right? Keep track of things, see what's going on, make sure that what's coming out of your accounts is actually yours, right? And not some mistake or fraud, right, that might go along with it. So, speaking of fraud, right, keep track of purchases, and compare what you think you've done with what the bank says you've done. Make sure that they're right. I mean, you don't have to check it every day. You don't have to check it after every purchase, but on some kind of a regular basis, and I'm not talking about, I mean, a monthly basis is probably the longest I would go, right? Just being honest with you. Don't give cards to anybody, right? Unless you're purchasing online and right? And if you're doing things over the phone or via email, you initiate the call. If somebody's calling you saying, hey, I need your credit card number for this, I mean, alarm bells going off, right? Fraud, fraud, fraud. Don't give out that kind of information on the phone. If you're concerned about it, something that's happening, your bank's calling you, the credit card company's calling you. It's like, you know what? I'm not going to give this to you. I will turn around and call the credit card company or the bank and make sure that whoever I'm talking to is who I think I'm talking to, right? Don't automatically be trusting of those kind of things, right? So that's what I say during that last, right, with that last bullet. Don't give out that information. You know, if you're buying something online, yes, you're going to put in your credit card number, your debit card number, right, whatever, to make that purchase. But on the phone, via email, people are asking for your information. Don't do it. right? 99% of the time, those are going to be fraud, some kind of fraudulent activity going on. Hang up, don't answer the email, call your bank, call your credit card company, whoever, right? And take care of it that way, where you initiate the call to a number that you know is the number instead of some random person calling. Let's be honest, being a jerk and trying to steal people's money, right? Just being honest, right? So this is some of what I've talked about, right? So use common sense and be suspicious about things that appear too good to be true, or people calling you, getting in touch with you, right? I don't need to read all of this to you, but just verify who you're talking to, right? Be in touch, understand, make the phone call yourself. Don't let somebody calling you try to grab you, and then finally down here at the bottom, right? Don't mess with the scammer, right? Trying to catch them in a lie, trying to, that sometimes that can be fun. Don't do it, right? You're not gonna get them, right? You're not gonna catch them that way. I mean, if you've got serious concerns about that, talk to your bank, let them know what's going on, your credit card company, and even talk to law enforcement, right, if it gets that far, right? So, all right. Talked about ATMs a little bit already, as it associates with checking accounts. So we're going to skip over that one. Sorry, I didn't realize I had that in there twice. Let's talk about establishing credit, right? So one of the best ways you can do this, and I've got a slide down later on that is a little more specific to this, but get an introductory credit card through your bank, right? You're gonna. I mean, we've all got to start somewhere, right? Not a single one of us started out by being able to walk into a bank and say, "Hey, give me $1 million," right? It doesn't work that way, right? You've got it. We all start small, right? Unless you inherited a whole bunch of money, I suppose that could be another story. But right, we all have to start somewhere, and for most of us, it's with a simple credit card. And here's just an example, right? This is a Discover card for students. Certainly Discover and American Express are not as popular as MasterCard and Visa, not as accepted in as many places. But, right, so we've got to have a fair credit rating. And most of the time, if you don't have a whole lot of credit, you're going to fall in there, right, until you prove yourself one way or the other, that you can do well or that you can't do well, right, at least in the beginning. So you can transfer balances from other credit cards. You can move things over, and the reasons people like to do that sometimes is that there is no interest on the balance of your card for the first 6 months, right? So you're not paying any interest. Maybe on this other card you already passed your 6 months, you're having to pay some interest. You move it over here, and you don't pay any interest for 6 months. While hopefully, right, you pay off the card. Hopefully you don't get yourself in that situation to begin with, but reality is sometimes reality, right? Because otherwise, for example, you got a 13 to a 22%, right? I'm just rounding those up a hundredth of a percent, right? You've got 13 to 22%, right? Every month, right? Now you're paying 1/12 of that, right? So really on a monthly basis, your interest rate for this 13% is a little over 1%, right? 13 divided by 12, right? These are annual percentage rates, not monthly, right? It's not 13% on your balance every month, right? It's that divided by 12, right? This one has no annual fee, no over limit fee. Now this is I won't call it deceiving, but if you go over your limit, maybe this and something like this has a $500 credit limit, and if you go over $500, they're probably not going to say a whole lot the first time. Second time, there might actually be a fee, or they might just cancel your card, right? Kind of a thing. So no late fee on your first late payment. Don't ask what it is after the first one. He hit number 2. And then you've got other types of things here where you can get cash back on things. There are different credit cards where you can get miles for United or Delta or whoever. You can get cash back, quote unquote, right? They just apply it to your credit card balance. Other travel cards, right? Automotive, right? I can get a Ford credit card, just as an example. And I can earn money to buy a car, right? But it has to be used for that specific purpose, right? It's not just cash back like this is. And your credit limit on this, I said $500 a minute ago, but many times it's determined by your credit rating when you apply. They're going to see how much excuse me, how much debt you've got, how many credit cards you have, what's your credit score, all that kind of stuff, and that'll determine what happens, right, as far as your credit limit to begin with. I'm not going to read all this to you either, but just what I'd like you to note is that there are multiple ways of calculating interest on credit cards, right? Everything, and it's going to vary by company. It's going to vary by card. Sometimes it's just what's on your previous balance, or average daily balance, right? So they take your balance at the end of every day in a month. Let's say there are 30 days in the month. They take that balance each day, excuse me, add it all up, divide by 30, or just take the average of those 30. That's what they calculate your interest on. Here's the worst one, though, is you're looking for credit cards potentially, right? This is a 2-cycle average daily balance, right? So they're going to go back 2 months, right? 2 cycles, and they're going to average it all together. Well, let's say that after that first month, right, I paid off a big chunk of my balance. They're going to still hold that first month, that first cycle's balance in there for you. I mean, and it's going to jack your interest that you're going to have to pay, right? So be careful. Look at those. Do some more research on things as you look at things. Every credit card application is required to have what's called a Schumer box, right? This box tells you interest rate, how interest is calculated, right? Not only the rate, but how it's calculated. It'll tell you fees and penalties and all this kind of stuff. It's required, right? The federal government required this, right, for every credit card. So as you're looking around, you're checking things out. Maybe you're getting stuff in the mail. Maybe you're just exploring things on the internet, right? That box with all that information in one way or another is required to be there. If you're not finding that, be careful, right? It's supposed to be there and open and obvious. Okay? Finishing this up. Okay, talking about credit and credit ratings, credit scores. Just some easy suggestions, right? Obtain a credit card through your local bank. You can do it through a larger Citibank, Chase Bank, all that kind of stuff, up to you. Only charge what you can afford to pay off in full every month, every cycle. Pay it off down to zero, right? You're not here to buy a whole bunch of stuff that you don't need, right? You're here to establish credit. Pay on time. Avoid applying for and opening numerous accounts. It hurts your credit score. And then stay on top of stuff, right? Check it. Check your credit report. Check your score. You can do that for free every year at a minimum. You can also consider a car loan, or some of you have student loans. When those things start coming due, right, make sure you're paying on time and doing what you're supposed to do. Finally, here are the possible credit scores, right? Just to kind of give you some information, right? 300 to 579. Well, you can see the different categories, right? It goes from 300 to 850, right? That's the range. Okay. Most people without any real credit history are going to be somewhere in here, right? In that fair to good range. And then you prove yourself one direction or the other. But what counts in this, right, is payment history, right? Are you paying on time? Are you late, right? One helps, one hurts. How much do you owe? How much credit history do you have? Have you been doing this for a year? Have you been doing it for a month? Have you been doing it for 30 years, right? The longer that history and those trends are there, the better your score from that. Do you have a whole bunch of new credit, right? New cards, new mortgage, new car loan, right? And then types of credit used. There are what's called revolving accounts. That's essentially a credit card, right? It just goes month to month versus a mortgage, right, where it's 15 years, 30 years, right? Something that's going to stay on there relatively short period of time, assuming you pay things off, versus things that are going to be on there for a very long time, right? Like a mortgage. So, okay, there's some info on those things.